Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, January 4th, 2011. Well, folks, here we go again. The market selling off early, but bouncing off the 200 moving average perfectly. And I mean perfectly. Look at that perfect hit off the 200, perfect buying opportunity for profits in the intraday stock chat. And that's what it's all about, folks. Whether you're a swing trader or a day trader, waiting for the appropriate levels to make the right decision based on discipline, based on methodology, make money, and profit. All right, now, first off, let's talk a little bit about what we saw this morning. You saw the markets fading today. Yesterday, we had a nice, strong update, but it ended on a little bit of a sour note. As you can see, we topped out yesterday on the first day of the trading year of 2011, right in this area, right around midday. The rest of the day, we saw a little fade. Today, we saw a minor gap up and then just a fade again, a little sharper of a fade, coming all the way down. You can see the gap window right here initially getting a small bounce, then cutting through, bouncing again right around that area. And again, for those of you that don't know, gap window is always a level of support to watch. Gap window is meant by the level of the gap. Where does the gap up come to? In this case, you can see the gap up right here, and that's where the surge began. Today, you can see as we came down, there was a little bit of support in that range. Finally, we broke down through it after making a little in spirit of bear flag, and the market went right to that 200. Since that 200 hit, the market has slowly reversed to the upside. Whether or not permanent open market operations by the Federal Reserve are propping it up or other reasons here, that's left for the imagination to take thought on. But either way, the markets have moved off beautifully. Really, at this point, the Dow is only, or make that the Dow is up 9 points. The Nasdaq is down about 12, and the S&P is down about 3.5. So it's been a nice recovery on the markets. Not that the big losses were there whatsoever, but you can say now, without a differentiating fact, that the markets are looking like they're going to have a flat day. We just got the FOMC minutes, and again, it looks like the Fed is still on their course to try and prop this market up using bond purchases and so forth. The dollar right now has, again, fallen a little bit off the highs. You can see, again, from the high levels earlier today, come down just a little bit. It's actually getting a small bounce here as well. You can see the analysis intraday here on the chart from yesterday as well. But again, the dollar yesterday gapping up and reversing to the downside, and then coming back slowly and steady to the upside over the last day and a half now. All right, let's go back to a couple different things. A couple key things I thought that were important in this market environment today. Number one, GLD. GLD is getting slammed today, and I mean slammed, down $3.50. Again, that gives us a key idea that Freeport-McMoRan and some other stocks would be good sells today. Anything gold-related would probably be down. We can take a look at FCX, which is Freeport. Freeport-McMoRan, it's off the lows, but look at that drop from yesterday's highs. And it was added to the bearish pro-trader watch list yesterday at the close because, again, we saw signals that there was a good chance of continuation to the downside based on yesterday's trading activity. And, again, that's part of the research center. If you are part of the research center, you can get involved and you get the pro-trader watch list, hot charts and alerts, technical tactic videos, nightly daily analysis videos, daily market report, hidden gems. You go on and on there. It's all included under that search of the research center. So everything underneath the research center is included there. And as you can see, the short was there right around the close. You can see the continuation down move. We also talked about some other plays. U.S. Steel, beautiful little short we talked about, added it to the bearish pro trader watch list. You can see the downside today, as well as some other plays like Southern Copper. Southern Copper was one of my favorites, and I'm going to explain why, give you guys a tidbit of information. If you go to your daily Southern Copper chart, you can clearly see right here yesterday you had a topping tail on the Southern Copper chart. SCCO is the symbol there. Now, the key about that, and this is very, very important, is that the Southern Copper chart, not only did it have a topping tail, but you also had a chart that over the last 3 to 4 months was up almost 100%. And again, if you go back to August, September, right over here in this range, it was a $26 stock. So now you're talking about a stock that's basically at 50 bucks, essentially 100% in the gain column, and now it gives you a bearish signal of a topping tail. That's what you're looking for. So again, with that, I told the Research Center in the nightly video last night, and again, at $49.99, you get access to everything there, that if you get a gap up today in Southern Copper, that's your short. Sure enough, what does Southern Copper do? It gaps up to $49.99 today, and look at the sell that ensued. This is the daily chart. We can look at the intraday as well. Look at that sell-off that came in, and look at the gap up. So that was what you were waiting for. And as I said, the key rule to remember is as long as you don't take out the high pivot of the topping tail from the day before, it's still intact, it's still a bearish signal, and you still look to short, and you obviously want a gap up so you get the best entry possible. All right, and again, look at the sell-off there on Southern Copper. So again, it's utilizing the methodology, folks. It's really nothing that crazy. It's not like it's relearning how to talk or learning a new language or any sort of rocket scientist. It's just understanding the rules, and we teach you all this in the Research Center in the nightly videos. You watch them enough, you'll gain all this knowledge, and we're going to tell you in the intraday stock chat as well. All right, going back to the SPY, again, as you can see, the market's just floating up. It looks like POMO has taken over at this point, which is permanent open market operations. Remember, that's the Federal Reserve buying treasuries, infusing money to the banks. The banks use it to infuse money into the markets. And again, up you go here to the 50 moving average, and that's probably going to be your next short-term scalping opportunity for those of you that are day traders. If you get through that eventually, you're going to look for the high of the day up here, which would turn the markets on the positive side. It is possible that they take this market positive today, folks. The Dow is already positive, and again, the Federal Reserve, as long as volume remains light, which it is again today, it always is a possibility that the Fed can control it and just prop the markets up. Remember, the goal of the Fed, and it's been this way, and I've talked about it for literally 6 months to a year, even more, and the media, it's just funny how the media is just talking about it now. The goal of the Fed, and this, again, it seems shady to me, their goal is to create an asset bubble. Artificial asset bubble by inflating asset prices by weakening the dollar and flooding the markets with money. That creates a false wealth effect to the average American. The average American then goes out and spends money. So these factors contribute to the market going up, because as the general public spends money, it helps the economy recover. Now, granted, if they're running up debt, it's going to end up just creating a new bubble that's going to burst, and it's going to be even worse than the last few that we've had. But that seems to be the thought process of the Federal Reserve right now, and you got to respect it. I mean, frankly, I don't like it for the economic situation of the U.S. in the long term, and the average American. I think it's the wrong thing to do, but I'm a trader. If you join us at In the Money Stocks, you'll become a swing trader or a day trader too, in which case you don't care what the market does. I don't care what the Fed does, frankly, in my day-to-day trading activities, because I position myself on swing trades for a few days to a week or so, and I'm going to make money that direction. Then I'm going to turn it around and make money on the opposite direction. Same thing with day trading. And you have to grow to do that. And if you have just an inch of discipline and you go by the methodology, you will make money, and it's a beautiful thing. All right, couple stocks to watch this afternoon. One is ABIO. I kind of was interested in this chart based on the daily. It's a small little bio. I like the move up and then the consolidation. It's starting to inch up a little bit on ABIO, so I am keeping an eye on that. BSDM is another interesting chart as well. I love this consolidation pattern. Look at that bullish consolidation. Strong up move, choppy sideways action above the 20. Could pop at any minute, really. That's another one that I do like. There are some small bank stocks, regional banks that I do like. PCBC is one I've been watching for quite some time. Low end of the chart, this actually had a reverse 1,000 for one split, so now it's a $30 stock. Very thin now because they did the reverse split, but it looks like it's a possible mover at any point in time. The one I like too as well is DEAR, Dearborn Bancorp, small cap here on the bank side. So again, the bank stocks are strong. They've been strong the last couple days. JP Morgan's even up 50 cents again today, which tells me that there's a decent chance that these stocks, again, could take off, and I mean the small caps on this side. And that's really what I'm looking for now, is a lot of the small caps have run. I literally made 50 to 100% on a couple plays last week alone, and other plays 25%, 30% gains. Ridiculous moves because of how good the small cap market was last week and the week before. Now there's not that much on the small cap side, so you have to focus in and analyze what hasn't gone yet. What are you still looking at? And again, DEAR here looks good. There's a few others that look good as well. Other than that, I like some possible shorting opportunities. We talked about those earlier in the video. The SCCO, my traders and my swing traders in the Research Center got that. We talked about that last night in the video. They were able to short the gap up today and are in the money sizably on that trade as well. So it's there to be had, folks. Again, it doesn't matter which way the market goes. The key is to become a trader of the market. And I don't mean a day trader. I mean a swing trader for a lot of you, since you don't day trade. That's the key, is to learn how to become that chameleon, that person that can change your shapes and sizes and go with the flow of the markets and always make money no matter if the market's going up or down. All right, enough said, folks. Let's take a look back at the SPY, which was nearing that 50 moving average. If we go into that, you can see it's right there. That's going to be a resistance point. You can see it didn't even reach it. It's starting to pull back a little. That will continue to be some resistance, so watch it closely. Take care, folks, and again, join the Research Center, join the chat room. Let's make some money. I will be putting out more alerts in the Research Center this afternoon and tonight for tomorrow's trading activity, so be involved so you can make the crazy amounts of money that our members have been making of late. Take care.